Housing continues to fall. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Yahoo Finance discussing, well, the continuing fall of housing. Now, have the spruikers given up? Is the argument that property is perpetually on the rise and as good as gold out the window? We'll have to see. We'll have to see. So housing values fall for a third month in a row. Before we go through this article, let's have a look over here. This is from the, well, Property Council of Australia, the Property Data Room, and we've got the median value of residential houses on CoreLogic's automated valuation method, and this is from April. So it's August now, so this data is a bit dated, but there Sydney was at 930, Melbourne was at 730, Canberra was at 685, the weighted average was at 678, Brisbane we were at 540, Hobart at 500, Perth at 475, Darwin at 470, and good old Adelaide at 462. So that can give you a bit of an understanding where property was a few months ago. So we'll have to see where it's heading, if it's continuing to fall. Now remember, none of the support mechanisms in our economy have been removed. JobKeeper is still in place. The reduction hasn't come through yet. The job seeker bonus is still in place. The reduction hasn't come through yet. Mutual obligations are only progressively being rolled out. Mortgage holidays have been extended until March. They haven't been removed. Trading while insolvent still exists. And unemployment is already at quite high levels. So I could see why housing may not be that affected yet, while claims that it's holding up are good because we're literally throwing almost everything we can at the market. The government is doing whatever they can. And I mean, you've got if you're going to bubble, you got to bubble, guys. You got to bubble. So housing values fall for a third month in a row. Does that mean we're in a housing recession now? Or it's probably a third quarter. Australia's property market has fallen for the third consecutive month in a row, with the median house value down 0.6% in July. Sydney and Melbourne drove the fall, with Sydney falling 0.9% and Melbourne 1.2%, the biggest capital city fall. Well, Melbourne will have to see how it fares next month. I can't imagine it's going to do very well. I mean, they're locking down so many different parts of the economy down there. How's that going to affect real estate? Who would be confident enough? I mean, if you're cashed up and ready to jump, why wouldn't you wait until forced sales start to materialize? Or are you, maybe people are targeting a higher end of the market where forced sales are less likely to materialize? Will it only be the working class or the poorer suburbs that take the hit? We've seen here on this chart here of unit price growth, all things aren't equal, guys. All things aren't equal. Some property is going to be more desirable than others. So Perth fell 0.6, Brisbane 0.4, Hobart 0.2, and Darwin 0.3. Canberra and Adelaide were the only capital cities to record increases, up 0.6 and 0.1 respectively. Now Canberra is a funny case. I mean, it's the home of our bureaucratic heart of the nation. So, it doesn't, the property there, we saw it in the commercial rents, and we'll have a look. We'll jump here. We'll go back. And let's have a look here at offices. And I just like to compare because it quite clearly demonstrates the previous recession that Australia had to have. We'll look at vacancy rates. Have a look there. Look at that spike just from 90 above. Vacancy went from 5% to over 20%. But that's for all of Australia. If we look at Canberra, didn't manifest. It's quite a delay. They didn't hit over 10% until 97. Whereas Melbourne, look at that jump. Sydney, look at that jump. So, Canberra's a different world, everyone. Regional homes have held up better, with housing values unchanged in July. While the fall in values has been widespread, CoreLogic head of research Tim Lawless noted that it had been a reasonably smooth slide. Well, yes, because we've got all these interventions. How many of these sales are forced sales? Is there anywhere where we can see that data? I can't imagine it would be easy to discover for sales. I know there was one woman on Facebook advertising all the time. Her whole shtick was getting forced sales. The impact from the pandemic on housing values has been orderly to date, with the national index falling only 1.6% since the recent high in April, and housing turnover has recovered quickly after its sharp fall in late March and April, Lawless said. Record low interest rates, government support and loan repayment holidays for distressed borrowers has helped to insulate the housing market from a more significant downturn. Now, if you were in business and say a natural disaster caused you issues, or something beyond your control caused you issues, or some unfair intervention by the state gave a competitor an advantage over you, wouldn't it be nice if you had gotten all these mortgage holidays and these government supports and handouts and things? The total number of homes for sale has fallen around 4.3% in the 4 weeks to the 27th of July, taking it 15.2% below where the figure was at this time last year. Additionally, increased demand driven by housing specified incentives from both federal and state governments, especially for first home buyers, have become more substantial. Yeah, well, they're just trying to sucker them in, guys. They're trying to sucker them in. It's kind of sad in a way, isn't it? That people are getting so desperate to get into housing, that it's so hard to get into housing, that it's so expensive to get into housing. The government is having to bribe people and chuck money at people. How would you feel? How would you feel if you bought here, at property prices, and you take a significant hit? If you take 20%, 10%, you buy $1 million, you buy a $700,000 house, you lose 70 grand. You lose 140 grand if you take a 20% hit. What about the Combank? They were talking about a 30% hit. How would you feel? Would you trust your government? Would that be enough to pivot some people away from trusting the government? Guys. So the cliff approaching, and the media is starting to discuss this more and more, because the government's doing whatever they can to mitigate it, and people are worried. Understandably so, because the cliff is when we will start to see the actual recession. The actual recession. It's going to be dulled even then. And remember, this is the government taking on debt that in one way or another is going to be extracted from future generations. So, however, as job seeker, JobKeeper and mortgage repayment deferrals are set to taper from late September, Lawless predicts house prices will continue to fall further. Urgent sales are likely to become more common as we approach these milestones, which will test the market's resilience, he said. Similarly, the recent concerns of a second wave of the virus and the potential for new border closures and strict social distancing policies are likely to further push consumer sentiment down. This is likely to weigh on both home buying and selling activity more broadly. Expensive homes are expected to lead the fall. Higher value homes historically fall first and furthest during difficult economic times, Lawless said, with the pandemic downturn no different. The top 25%, the upper quartile, the most expensive, have fallen 2.9%, while the cheapest quartile has fallen 0.5% since the end of March. So, remember we did a video about the guy who had like 200 properties, and he was targeting working class properties and renting them out. So he's probably JobKeeper and JobSeeker safe with his working class suburbs there. Even if he takes a huge hit to his value, it won't be as significant as some of the posher properties. Sydney and Melbourne has also been bearing the brunt of the value falls, with Sydney's most expensive homes tumbling 2.5% over the last quarter, and Melbourne's most expensive plunging 5.2%. But property is performing better than expected. Well, could that be because none of these interventions were expected? None of them were expected. I asked John Adams about it, and, Martin North was probably the only one that was saying they will do unconventional measures. Because bloody hell, I didn't expect them to give people 10 months off their mortgage payments. Did you? Did anyone expect them? I mean, now with hindsight, it's easy to see. I thought they would do all the stimulus packages, all the money, everything to encourage people into it, but I didn't see the banks giving people holidays for that long. What would the market be like if they hadn't done that? You know. I mean, this is the ultimate get out of jail free card, you know? You know, all this recession. Even our recessions are now bloody covered in we even have soft bloody snowflake recessions. Cotton wool recessions. The government's hugging you like an overprotective helicopter parent. Bloody hell, we can't even get the resilience training from our recessions like previous generations. Shit. Lawler said Australian property has weathered the crisis better than anticipated, with the decline in values fairly moderate. However, the property market's real test will come in October. Exactly. We haven't really experienced the recession, guys. Do not fall into the trap that the media is putting out that we've troughed. We can't tell if we've troughed until until you remove the support mechanisms under your slab. You're not 100% certain that she ain't going to come crashing down. Okay, you don't want to be standing under there. Sure, it's all good. The mass is right, but you never know. You never know. You're always a little bit iffy. Will she hold? As stimulus measures wind down and borrowers are taking a repayment holiday face up to their debt, it's logical to expect a rise in distressed properties coming onto the market, he said. The extent to which this causes additional downward pressure on home prices depends on how the Australian economy is travelling at the time. Further outbreaks presents a clear and present danger to the depth and length of the recession and the performance of the housing market. There we have it. What do you all think, everyone? What's your take on it? Do you think property, do you think we've troughed? Do you think we've troughed? Would you jump into the market now? Do you feel sorry for the young people that are getting these home builder grants, that are jumping in, that are paying above reserve, that are taking on huge debts right now in this economy? It just seems insane. I get maybe if you're a health worker and you've got your job all sorted, but then why wouldn't you wait for these support mechanisms to be removed? Is it that hard to see? Let me know in the comments, guys. Am I just... I don't know. It seems like common sense to me, but that isn't a thing we have anymore, is it? Anyway, thanks for watching. Let me know your opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel here on YouTube or Patreon. You can support us using any of our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy our merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day, and I'll see you next time.